No, aloha everyone. All right, well, what I was pretty much sure was going to happen as we've closed out the worst 6-day period historically for stock returns, going back to 1950, finally happened on the final day. Now, what's so funny about all of this is that starting today, starting at the open tomorrow, the most bullish 9-day period for the NASDAQ going back to 1971 begins, and the most bullish 3-month period for stock returns begins. That being said, this is not something to step in front of right now. Big, ugly rollover. It's still a secular uptrend, secular bull market. I'm still more interested in looking for long positions and shorting this market. And I'm going to repeat to everybody, until this market is below this 200-day moving average, comes back up and fails at that weekly 200 moving average line, there is no real reason to be bearish. If you want to see what it looks like when a market is, pardon my language, but fucked, is whenever you see this happen, see that return back to the 200 moving average, and then this happens. If you need another example, let's go back to we can't on the DIA. Can we on any of these? Yes, we can on the QQQ. Get back below the 200 weekly moving average, you push back up to it, and you just die. SPY in 2000, similar situation. Back below the 200, you get back above it, but roll back below it, and then you're dead. So until you see that actually happen, there's another example here in the SPY in 2008. Until that happens, to me, we are still in a secular uptrend. I want to be a buyer on pullbacks, not sellers. That being said, short term, we've cracked and we've cracked hard. We're still holding above the September lows on the SPY, but look at the volume on the sell-off. This has just been a constant since 2018. If you look at the sell-offs here, heavier volume, red bars above the average line, 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 red bars above the average line. Guys, if you want to know what a healthy market looks like, all of these red bars above this 50 weekly moving or daily moving average line would be green, not red. So the volume profile remains absolutely atrocious. And with today's sell-off, that almost guarantees, haven't looked at it since the start of the month when I made that weekend video lesson, which has just got no traction, which, by the way, CROX, since that video lesson, is still up almost 20%. But since that video lesson, I have not looked at that monthly TSV, which was looking like it could close bullish if October was strong. Following today, I guarantee that monthly TSV is still red on the SPY, is still red on the IWM, and has been that way since middle 2018. So until that curls back up, until that looks bullish, we can't expect miracles to happen on the end-of-day side. Now, what's really funny is I know a lot of swing traders that navigated the uptrend from the March lows to the August highs that did very, very well and made me feel like an idiot, like I didn't know what I was doing. But what I've seen from those guys in the past month to 2 months has basically been nothing but pain as they continue to go large in size into swing trades that following today has left a lot that I track on Twitter and a lot of pain. That being said, guys, I started to trade small. Trade small, don't trade at all. Took a ton of money out of the end-of-day portfolio side. Got super small with my position size using a max dollar loss per trade instead of a percent per trade. And therefore, today is just a nuisance day to me. No harm, no foul. I'm going to remind everybody that the quarterly portfolios continue to do very well. And despite today's bloodbath, I'm shocked. My user-defined index, the top big cap portfolio, is still up 12% this quarter, compared to the S&P being down 3% plus. The mid-cap growth is up 4% compared to the S&P being down 3%. The dividend portfolio, which is supposed to be the safest, I've got to really work on that one. It deals with everything's got to have a strong relative strength, but it also has to have a dividend. That one is now down 1.4% this year, still beating the market. And then more impressively is that strong accumulation distribution line, strong relative strength across the board line portfolio doesn't have to be beating earnings and sales on the top and bottom, or it doesn't have to be beating on the top and bottom line in the most recent quarter, is still up 12% this quarter, while the market's down 3%. So you have either long-term or super short-term. If you're not day trading, then you have the only other time frame to work with to me is the quarterly portfolio, where you hold for 90 days, 10 stocks, 10% of your portfolio, or however you want to do it, trade them however you want to. You focus on those names, and or you do what I always advise. If you have long-term investment goals in a 401k or your IRA or a Roth IRA or a SEP IRA, and that's the same dollar amount every month, every quarter, and as the market pulls in, you increase your size. That's the only way I can see navigating this market on an end-of-day basis with the VIX up here. And I'm going to remind everybody, my end-of-day methodology does extremely well when the VIX is below 20. 2019 was the first time that the VIX stayed below 20 that I didn't get a lot of great signals or have a ton of big winners or extreme outperformance against the market. What correlated with that period? A negative monthly TSV in the SPY and IWM. Every other period in the market where the VIX has sustained itself below 20, I have done extremely well with my swing trend trading. But as you can see, since that March low, the VIX has never, ever printed below 20. The closest it came was back in August when it ticked at 2028. This is the longest time period ever, or up during a market that has not sold off, that the VIX has remained elevated. The market has never traded sideways or higher for this long of a period in time without the VIX ever going below 20. And the market has never rallied as much as it has from the March lows to the now August highs with the VIX being below 20. And that goes back to data to 1986. I've back-tested this to 1986. I wish the VIX existed before, but it hasn't. This is the furthest back I can go. But never, ever before has the market rallied to the degree it has rallied, with the VIX refusing to go below 20. And it's never gone for this long of a period of time above 20, with the market either moving sideways or moving higher. So keep that in mind. We're still dealing with completely insane overall conditions for these intermediate term time frame trades. Granted, I've never also, could have been long PTON. The model portfolios are proving it. Look at PTON still. Look at NEO still. Tesla, only now starting to roll over. Zoom, look at these names. Zoom was a new long. Don't forget, guys, I gave Zoom out as a long position here. Remember? Look at what its gain is from there, 364. Did I lose Zoom along the way? I sure did. I was almost completely knocked out here in May, and then I was completely knocked out of Zoom in August by keeping too tight of stops. Same with NFE. So we've had some big winners that have been quality. The only problem is it hasn't been smooth. It's been choppy. And that once again goes back to that monthly TSV and VIX. So just understand where you are in terms of the market, in terms of the internals. Wish I could go back in time and be like, you know what, that's it. We're focusing only on the can-slim quality stocks with the best relative strength and accumulation distribution lines and strong industry groups. I always focus on strong stocks in the best strong industry groups. I've never, I will repeat, have ever seen a period in time where the strongest stocks and the strongest industry groups have performed so much better than my personal signals. Yes, the strongest stocks and the strongest industry groups during uptrends are always going to be your best bets, but I've never seen the divergence between how they performed versus my actual signals. Had I known that this was coming, I obviously would have focused on the best of the best names that held up during the market pullback. Stocks like AMD, et cetera, Apple, Amazon. Hindsight's perfect 2020. Moving forward, though, I will know if the market rallies, if the monthly TSV is bearish, if the VIX is elevated, that I need to focus only on the best stocks and the best industry groups. Look at FSLR today. Where do you think FSLR's industry group is right now in Investors Business Daily Market Smith? Group relative strength, 99. No surprise, despite the market bloodbath, FSLR, look at this stock, new all-time highs. That's just incredible. Not all-time, 52-week highs. So keep that in mind as we move forward. Now today, Holy Grail Scanner only hit one stock. Where am I going with this? Where is this? UAVI, AUVI, thank you. This is the one. We'll go intraday here. And as you can see, pre-market sold off well off its morning highs, and there was no setup intraday. I have done zero due diligence toward what happened on the intraday side today, but there is a setup here. When it breaks back above VWAP, then sells off, you can put a buy stop here. But once you lose that support level, it's basically reset, becomes more risky, more prone to failure, and that is indeed what happened. You had that initial breakout above those highs on VWAP. This is why you got to take profits in front of the high, the previous high of the day. It then completely rolled over. The day before, there were a couple of stocks, but WEI, this was by far the best stock that I saw setting up overall. WEI is already in play. When it got back above this little high level here and did it on strong volume, it's really in play. Consolidates, sets up. Look at that long, medium squeeze. Look at the move higher. And if you have, even if you don't get it within that structure where the EMAs are properly stacked above the VWAP, and you get at that high day breakout yesterday, you got a 30% plus move on WEI. And if you're taking profits higher along the way, like I said, you're not going to get the full 30%, but it worked out really well. But that was the only intraday setup. There were others. That SRRK, amazing. And today, even further gains. But you know what? I see no area to buy it in the morning. And late day, yes, you can put a buy stop above here, and you do get that push, and you get like about a 15% move. And then once again, the only way I know to hold on to this is with a small position. You use those previous highs. Those are resistance levels. They should act as support. That happened with SRRK. Close strong. You hold a little bit over the session. Today, you had the minor gap up, goes red to green, finds support right at the previous day's high, and you get another nice rally out of SRRK. The thing is with SRRK, even though it was in play, obviously hitting my scanners, it was higher price, but the float was greater than 25 million. So it didn't hit any of my low float scanners. So it only would have been a secondary consideration. But besides those two stocks yesterday, WEI and SRRK, anything that hit any of my scanners basically failed. And today there was only that one stock that hit my Holy Grail scanner, AUVI. So keep that in mind in intraday or long term. That being said, one of my favorite signals come when stocks trigger actionable signals on bloodbath days. I actually do have two new long signals for tomorrow's session or for any time in the future until they fail. The first one to go over is FVRR. Now, the good news about FVRR is they had earnings this morning, so we don't have to worry about an upcoming earnings release. And they not only had earnings this morning, they beat on the top and bottom line. So they're earning. So it's an earnings winner. So it's a very strong earnings winner. On top of that, FVRR has a group relative strength rating of 92, has a personal relative strength rating of 99, and it's canceling quality with earnings and sales growing in the last two quarters and estimates being raised for 2021. So really great signal. Hammer candle off that 50, heavier above average volume, and look at that nice little surge and bop from yellow to green. The biggest problem with this one is, though, look at what it looks like on a daily. It's getting a little volatile. So I have to risk that same dollar amount from high to low. So 163.28 is going to be my stop at 1% limit offset, and my low is 140.69. I got to take those two totals, subtract the buy stop from the sell stop, get that number, divide it into the dollar amount I'm willing to lose out the gate if it fails, and that'll be my share size. If we look at FVRR on Telechart version 18 to see how things are lined up on this level, you will see it's not perfect. The buy stop is above price. The 5 EMA is below the 9 EMA, but the rest of everything is pretty much stacked. We're starting to enter a loose squeeze. TSV, PPO's above zero line. Shaken's back to zero, and the accumulation distribution looks strong. So it's not a perfect setup, but it's pretty good on a red day. And then the actual other signal is an quote add signal. I already got an initial signal on HOV this day, but using the buy stop methodology, it has not triggered yet. So that 33.28 buy stop order is out there with that 1% limit offset. Pulled back the day before, and then yesterday, I should say, and then today, an even better signal has emerged. Is volume heavier than the one volume day? No, but look at what BOP does. It basically, I don't think that's max green, but it basically moves up to near max green, which is heavier. Excuse me, sorry, I hit something in my throat, which is heavier than the previous two green bar sessions. So this is actually a better signal to me because it slightly undercuts the previous low, rallies, and then closes at the highs on a day when the market closes near the low of the day. So HOV is an add signal. HOV is pretty solid. It actually has 14% of its float short. So I love that. Has a group relative strength rating of 91. Love that. And a personal relative strength rating of 93. Love that. I think earnings aren't due till December 5th. Love that. So everything is out of the way. The game plan with HOV on this signal, 32.79. Subtract it from 30.04. Get that number. Divide in the total dollar loss that I'm okay losing. That's going to be my share size. Now, you can trade these any way you want. FVRR or HOV. 100% of your account capital into it, risking 1 R per trade or to the stop, 10%, whatever. It's all up to you. I'm just telling you what I'm doing, and I'm going to say these two signals are very, very nice on a day when the market is red. I flagged some other stocks. They're not legit signals, but LVGO performed well today. Loco, these are from my CanSlim quality and perfect speculator scans. STRO, OTRK, SGRY. Do you notice something with almost all of these? Health services or drugs or biotechnology related. I don't think that's any coincidence. All right, everybody, I'm going to wrap the video lesson up there. The one thing, before I do, I want to show you one thing because I forgot to post this chart last week. Do you see this chart right here? This is the combined riff-raff Sharpie indicator. When it's down here, that's not good. When it's up here, that's good. Last time it was down at these levels was here. That was right here at the January 2020 highs. You see what happened. When it got near those levels here, right here, you can see what happened. Sell off. Then a rally. Gets up here, we rally. Gets up here, we rally. This means the Sharpies are long, riff-raff is short. When it looks like this, the Sharpies are short, the riff-raff, quote, dumb money is long. And we're up here. Doesn't mean we're going to have to sell off, but today's tape basically confirmed this ratio. And it's one of my favorite short-term technical indicators. Other areas of interest that were concerning heading into today, the past 2 weeks during this rally. This is the first dip. This dip was not bought by hedge funds. This dip was not bought by hedge funds. This dip was not bought by hedge funds. Take a wild guess what hedge funds did during this dip. They bought. This dip saw the put-call ratio increase. This dip saw the put-call ratio increase. This dip saw the put-call ratio increase. Guess what didn't happen during this dip? So everything is lined up for further selling despite the seasonality. Just keep that in mind as we move forward. Keep your trade small or do not trade at all on an end-of-day swing trade basis. And I'm going to remind everybody, my methodology is not going to start producing huge winner after winner after winner after winner after winner after winner after winner like it did in 2017, like it did from 2013 to 2015, like it did every freaking year from 1998 to 2008 until this VIX is back below 20. And right now, it's above this blue line. This is where it starts to get a little bit better. Hasn't been lately. This is when it gets good or great. This is danger zone. We are now in danger zone.